Looking to purchase a home and want to save the most money per month? Concerned about those monthly payments? Well, this video is for you. We're going to talk today about temporary buydowns and how to save the most money per month in the current rate environment. My name's Stephanie Johnston with the Johnston Team over here at Service First Mortgage. So if you might have heard the term temporary buydowns or 3-2-1 or 2-1 or 1-1, what does this mean? What's going on? I'm going to talk about that today. A temporary buydown is something in which the seller provides to help lower the monthly mortgage payment for a new homeowner. And the number represents the amount of decrease from the end mortgage payment or in mortgage rate. So if a homeowner, you take a normal 30-year fixed mortgage and think of it as an add-on, it goes to that mortgage term. So let's say that a homeowner is going to get a 30-year fixed option and they choose a 2-1 buydown. That means that for the first year, the interest rate is 2% below that start rate. The following 12 months, it's 1% below that end rate. And then after that, graduates up to that final mortgage interest rate term. A 3-2-1 does the same thing, but that first year is subsidized at 3% below that end mortgage rate on the home loan. So I'm going to pull up my screen here and show you guys an example of what I mean. So in this case, I worked up an option where the homeowner obtained a 6.75% 30-year fixed option, and they got a monthly subsidy or a subsidy from the seller to cover a 2-1 buydown, 2-1 interest rate buydown. So this first year on this home loan, their mortgage payment or the mortgage interest rate was 4.75%, saving $406 a month in their mortgage payment. So guys, $400 a month, that's a huge savings on payment. Then the following year, for 12 months, they're going to have the mortgage payment at 5.75 and then get you up into $208 savings, graduate up to that final mortgage interest rate of 6.75. So a huge savings. So how does this even work? This is a product that you can add to a conventional loan, a VA loan, USDA, an FHA. All the products are going to allow this. You can do this if you're buying the house as a primary residence or a second home. Unfortunately, if you are looking to purchase this as an investment property, the end investors don't allow this product. But for everybody else, it is something we can look at doing. And so logistically, what actually happens is the seller of the property is going to front the money for the difference of the savings. So let's say in this scenario, this $406 a month, that's going to cost the seller $4,800, $4,800 and some change to buy down that amount. Then we're going to take the second year, so that 208 again times 12 months, and that's another little under $2,500 a month. So in this case, it's about $7,300 that the seller is going to provide the buyer to use towards monthly buydown. So some people say, I don't know, will a seller cover this? In our current market, we actually are seeing a lot of sellers contribute money towards closing costs. And this is one of the best places to put it. And the reason that it is sometimes better to put it here than possibly a scenario where it's a long-term rate buydown is the money, for example, rates drop, let's say in 6 months from now. We can take advantage of our rate protection program, guys, which then gets your rate down. We cover all closing costs, a good chunk of the closing costs associated with that. Let's say that happens and the seller's given you about $7,500, $7,400 to work with toward buydown. Well, then if you've only used a portion of that buydown, the rest of it is actually applied towards your payoff. So that's a huge misconception about the product, that if you do these loans, then you refinance, you lose all the money. You absolutely do not. So there's no reason to not do this. It's also the most effective way to save the most money per month in a mortgage transaction. Where else can you save $400 a month in a monthly payment? It's pretty difficult. The other impact, if we said, okay, we wanted to extend the amount of time in which that you're doing the buy down, a 3-2-1 is a great option. Because again, this rate would have started at 3.75% and added an extra year of subsidy payment. So a really good tool to help save the most money per month in that mortgage. So I hope this information was helpful and we will talk to you soon. Thanks.